You have logged into Heritusleadtransfer. Please like, share and subscribe to Heritusleadtransfer for recent updates on mortgages. Myths can mess us up. If you believe the common myth that you need to wait 24 hours before reporting a missing person, for example, you can hamper the police's ability to find a missing loved one. If you believe that vitamin C will knock out a cold, you can spend money needlessly on something that won't make your sniffles any better. Even when it comes to buying a home, there are myths that can hurt us, financially or otherwise. Here are 7 common myths related to real estate. See which ones you've fallen for and set yourself straight. Mortgage myth number 1: a home is a great investment. It's tempting to think of a home you buy as a great investment that will build your net worth considerably. Well, disabuse yourself of that notion. Real estate expert Robert Shiller has studied the matter and reported that between 1890 and 1990, home prices did rise faster than inflation, but only by an average of 0.21% per year. Between 1950 and 1997, they beat inflation by only 0.08%. Mortgage myth number 2: you need to put 20% down. It's a myth that you need to fork over a 20% down payment on a home, borrowing only 80% of the home's value. The truth is that you can pay far less in a down payment, sometimes just 5% or even less. Paying less than 20% will likely mean that you have to buy private mortgage insurance, though, costing you more. And it will put you in greater danger of being underwater on your mortgage, if your home ends up worth less than what you owe on it. In such cases, it can be hard to sell the home, as you won't recoup enough to pay off your loan. Mortgage myth number 3: you can't buy a home if you have a lousy credit score. It's not true that a low credit score will keep you from being able to buy a home. It is true that it will keep you from being offered great interest rates, though. Mortgage myth number 4: once you're pre-approved, you're all set. Once you decide you're ready to make an offer, as soon as you see a home you want, get pre-approved for a mortgage. That can make you a more competitive buyer, putting you ahead of those who are merely pre-qualified and those who have not even consulted with a lender. Mortgage myth number 5: 30-year fixed-rate mortgages are best. 30-year fixed-rate mortgages are by far the most common home loans, but they're not necessarily the best kind for you. If you can afford the higher payments of a 15-year mortgage, you'll be able to pay off your home much sooner, which can be very desirable if you're approaching retirement, and you'll pay far less in interest. A great compromise is to get a 30-year loan with no prepayment penalty, and then pay significantly more than your required payment each month. That way you can shave many years off the loan and avoid a lot of interest payments. Mortgage myth number 6: it's important to pay off your mortgage as soon as possible. It can seem quite sensible to pay off your mortgage as soon as you can, but it's not always your best move. That's especially true in our current low-interest rate environment. If your mortgage has a 4% interest rate and you pay an extra $1,000 toward it, it's like earning a 4% return on your money, as you'll be avoiding paying 4% interest on it. But compare that to other things you could do with the money. If you could instead invest it in a retirement account where you expect to earn at least 6% or 8% on average over the long run, then that's arguably a better use of the money. Note, too, that mortgage interest payments are deductible, though there's some murmuring in Washington that that might change in the future. Another consideration is whether you have any high interest rate debt, such as that from credit cards. If you do, paying that off is a much higher priority. Mortgage myth number 7: it's too late to refinance. Finally, Don't assume that as interest rates have been inching up, that it's no longer worth refinancing your mortgage. A rule of thumb is that if current interest rates are at least about a percentage point higher than your current loan's rate, refinancing is likely to be worthwhile. Just be sure you plan to remain in the home long enough to offset the closing costs of the refinancing. What is that you feel? Please comment in the box below.